Welcome to How Do They Afford That, the podcast that peeks into the financial lives of everyday Australians. I'm Michael Thompson. I'm an author and the co-host of the podcast Fear and Greed Business News. As always, I am with Canna Campbell, financial planner and founder of Sugar Mama TV, which is a financial literacy platform that you find pretty much everywhere. YouTube, podcasts, books, Instagram, threads, TikTok, keynote speeches, everywhere. Hello, Canna.
Good morning. How are you?
I am good, and I am looking forward to today because we are going to help everyone save a bit of money today.
That's what we do. We're good at this.
Yeah, it's a lofty goal. Every single person who's listening to this right now is going to save some money, because today we are talking about the idea of a loyalty tax. We are looking at who is paying it. Spoiler. It's pretty much everyone, right? How much it's costing you, how to stop paying it, and most importantly, how to start saving some money. Let's get straight into it. What is a loyalty tax?
So loyalty tax is where you simply pay because you've been a long-term customer. And I don't really want to point fingers here, but companies sometimes think that we're not going to go and check our bills or shop around for another deal. So they gradually and gently increase prices without us necessarily noticing, or they fail to let us know about any new special promotions and discounts that they might have coming up. So essentially, it's a financial penalty for sticking around with one provider for too long and not actually stopping to question the actual value and whether you could be getting better value potentially elsewhere or asking for a better deal.
Okay, and so typically this is where you will see special deals being promoted for new customers and things like that. And you're like, hey, I've been with you for 5 years or 10 years or something. Like, why don't I get that price that they're offering?
That's not fair. I want that deal too.
Now, I think there is the general assumption that this is all about banks. It is not all about banks. Is it because there are other service providers?
Yes. So look, banks probably get the first finger-pointing deal when it comes to the term loyalty tax, but it's not at all just limited to banks. Insurance companies, particularly personal insurance.
Yep.
Then there's gas and electricity, gym membership, subscriptions. And I remember during Frugal February, I called up my energy and gas provider, which is the same company, and within minutes, I had $130 per month knocked off my plans.
Did you say $130?
Yeah. Have you not been listening to any of my Frugal February results?
Yes.
Clearly not.
Yeah. So, I wasn't aware that the savings were so big.
Yeah.
That is really impressive. You mentioned insurers, right? And I want to kind of cover a whole lot of those, like gyms. I'm surprised by gyms as well, but can we just stay on insurers for a moment? Because everyone has some form of insurance, right? Whether it's your car insurance or health insurance or your home insurance. You see that there is like a loyalty discount when you go to renew. You get kind of like a 25% off for being a loyal customer or something. Is that then a little bit deceptive?
It can be. So there's all sorts of benefits and perks that can come with some of these insurance policies. Access to certain parks and entertainment and, various sporting activities. But you've got to really look at what's applicable to you and whether you're going to make the most of that. So yes, there are discounts, but there also are ones that can also encourage you to spend money where you weren't going to necessarily. So it actually can end up costing you even more, as well as the fact that it's not necessarily that competitive. A classic is, where you see, and it's not just insurance companies, even particularly retail, they'll have a special sale for the weekend where you spend $300, but you only have to pay $200. Now, you may have never intended on going and spending $300 in that store, or even $50 in that store, but because of that offer, they've enticed you in and to spend and to obviously partner with their, colleagues and associates and partners.
Okay, let's kind of go to home loans or banks generally, but focusing on home loans, I suppose, because this is probably the big one and the one that is most, look at me making assumptions here. I'm hoping this is a correct assumption, that a loyalty tax on a home loan where you have been with a bank for a very long time and you have been paying perhaps one interest rate for quite some time, and you see new customers being enticed to come over to this bank with a fantastic interest rate, and you're thinking, why aren't I getting that rate? banks would be the one that you are paying the most on a loyalty tax, right?
Look, everyone is obviously in a different situation, but yes, and I'm actually really glad you asked this question because I ran some numbers and the numbers are looking quite sexy, if I don't might say so myself. So if you look at, say, an average home loan of about $500,000 and you're paying on average over the life of the loan, which is typically around 30 years, around sort of 6.5%, but you then negotiate 5 years into 6%, that's $2,500 a year in savings. Now, if you think about that just for a 10-year period alone, that's $25,000. But though that potential cost or that potential savings can go even further, because if you maintain your existing mortgage repayments as though they already remain at 6.5, even though you're only being charged 6, you could potentially save $55,000 and pay off your home 2.5 years off sooner. So that loyalty tax is definitely not just limited to the $2,500 per year. It represents so much more. And of course, paying off your home loan 2.5 years earlier, that those mortgage repayments can go into super, to go into investing, to go into, other lifestyle requirements. So it really does pay to look at where you're potentially being overcharged.
How do you know, though? Like, it's all well and good to say, hey, you can do this, you can kind of get a better deal, but how do you know if you are actually paying a loyalty tax, if you are overpaying as a loyal customer?
Well, one thing's for sure, they're not going to call you and tell you.
They might. The goodness of their heart.
I think I've had one phone call like that in my whole entire life.
Really? What was it?
It was, I think it may have been Foxtel.
Yep.
And that was probably because I was threatening to leave. But
so slightly different scenario.
And I will admit, my mortgage broker every year, if not twice a year, he will call the bank on my behalf.
Okay.
And he will then call me and say, hey, just letting you know, I've just negotiated X basis points off your home loan. It's already been applied. Just, you'll see those repayments coming down if you want to maintain them. So yes, I have seen it. But unfortunately, because these institutions know what we're like, they won't go and give it to us. We have to go and find it ourselves. We need to arm ourselves with the right type of information, do our research, know our numbers, and then have the confidence to pick up the phone and say, hey, I think we need to have a little chat.
In a minute, we're going to go through what you should say on the phone, almost a little bit of a script. We could do some role
play.
Role play. Are you going to be the customer and I'll be the banker?
I want to be the customer. I'm going to be hustling up a better deal.
Okay, and I will be the service provider, maybe the gas provider.
I was thinking we could do the bank because most people like to call their banks. That's the biggest savings. Come on, we're all about maximising our savings here.
All right, fine.
Let's work efficiently.
Okay,
Don't go for the low-hanging fruit here, Michael.
So, well, okay. Look, can I just touch on how you know you are paying a loyalty tax though first? Because we talked about the fact they're not going to call you up. You need to be checking this yourself. Is it a case of, say, with your home loan, logging in to your bank account, seeing what the home loan rate is that you're currently paying, going to the bank website and seeing what the comparison rate is or what the introductory rate is for new customers and going, hey, that's less?
Yes, that's only half the story, though, half the job. You then need to go and have a look at what the competition is offering new customers.
Okay. And that will tell you whether you're overpaying, essentially, or just whether you have fallen victim to a loyalty tax.
Exactly.
Okay. Why do you reckon people stay for so long? Is it laziness? Is it complacency? Is it just the fact that we are all so busy and this takes time?
I think it's three things. I think, as you said, life gets really busy, and unless we are sort of backed into a corner and forced to actually review our bills, like doing Frugal February, we need that trigger or that financial crisis in our life to actually make us pick up the phone or look at our bills or look at our budgets and go, all right, something's got to give here, like even an interest rate hike. But then there's also the psychological factor. So a lot of us assume that we're being taken care of because we're being so loyal to our bank, to our gas provider or energy provider. So we assume that we're going to be being rewarded. Of course, we're on the best deal. I've been with my bank for 12 years. Why would they jeopardize, damaging me or hurting me or overcharging me? That's just ridiculous. So we kind of paint this false sense of reality. But unfortunately, it's not quite as simplistic as that and a little bit naive to think like that. And then, of course, I think for a lot of people is we feel completely overwhelmed, particularly right now, with the idea of having to pick up the phone, have that awkward sometimes uncomfortable conversation that does actually require you to actually do a little bit of groundwork beforehand and then ask for something that we don't necessarily fully grasp or understand the actual work involved and if it's even possible. So we could very easily put it to the bottom of our list of things to do and it never ever gets done. And I have shared, which I'm really hoping you remember this as a little hack for people who are feeling overwhelmed, make that phone call to try and make it as easy as possible, is have the telephone numbers in your phone saved. But in the notes section or even in the notes attached to that contact, you have your policy numbers or your home loan numbers or your customer service numbers so that when you do get someone that answers the phone, you've actually got a lot of information they can look up on your behalf to get the conversation going.
Yeah, and you can do it while you're sitting in the car park waiting for someone or something like that.
Exactly.
You can make the most of those little moments of downtime.
Exactly. And it just, especially when you're sitting there thinking, I've got to do it. And this is my New Year's resolution, is stop thinking about it, just get it done while you can.
Okay.
Otherwise I'll forget about it, it'll evaporate. So I think, being on the front foot with loyalty tax is really important. And the longer it drags on, the bigger the cost to you. And, we're all on tight budgets right now. Every dollar counts. So cut the excuses, do some research and make those phone calls, which we'll explain in a second.
Okay. We will take a break and then we're going to talk about the information that you need to gather to make these calls. And then, a bit of role play.
A role play?
Very excited about this. Canna, we are talking about loyalty taxes today. This is essentially the idea that you are overpaying with a provider of some kind, whether it's your bank with your home loan or your gas, your utilities provider, your water, anything along those lines, insurance, gyms, that you have been there for long enough that really you're kind of being left behind. There are better offers out there and you could be getting a better price. And this is all about how to get that better price for you. To make that call, though, to ring up and say, I want a better deal, what information do you need to have in place? You mentioned before just the basics of having your policy numbers and all those kinds of things. But surely you also need some a bit of leverage to say, I could get a better deal over at this other place.
Yes, you are spot on. So the more information you have, the better. So preparation is key here. Don't just jump on the phone because you could end up wasting quite a bit of time. So what I recommend you do is go and jump on your internet banking and look at the interest rate that you are paying, which should be clearly marked. Also check and see if there is a discount that's been applied. I know in the past I've looked at my home loan rate and thought, I can't believe I'm paying that. But then I've looked a few lines down and there's actually a discount on that rate. So make sure you have an accurate amount of information about what you really are paying. Also, things that are really important that you can use to your advantage, obviously knowing how long you've been with your bank for or your financial institution and how much you've paid off. And of course, if you have a good repayment history, you've never defaulted, there's never been any sort of late payments, any awkward phone calls, you've got a good standing, solid history in not only being a loyal customer, but also being a very responsible, reliable one. Then you also want to go and have a look, as you mentioned, see what they're offering new customers. Mm-hmm. And see if there's any particular terms and conditions. Because whilst it may look like a brilliant honeymoon rate, there could be some finer details that it's not until you go digging, you go, actually, that's not really that good a deal.
Because they can often be introductory rates, where it might only be for, say, 6 months or 12 months. And you are talking, in the case of a home loan, you're talking kind of 25 plus years.
Exactly. And it may revert to something that's actually higher than what you are paying. So it's worth doing your research. Then, of course, you go and look at what the competition is paying. What's another institution offering to move your loans over to them? Have everything written down and make sure you've written it down so you can refer to it. So you can say Bank XYZ are now offering this. Bank ABC are offering that. So that they know you are serious, you've done your research, and this is not a conversation to be fobbed off. Not the bank would necessarily do that, but you're going to come across a lot more, you're going to be taken more seriously and you're going to have a lot more productive conversation. So then when you've got all of that information, you can now call the bank. And you are literally, it's not all guns blazing, but you can say, like you're almost like pitching yourself as, I deserve more me time. Like I want a better deal on my home loan. And that is when, get the balls rolling. And this is where you can see where it all lands.
Is it time?
It is time.
It's time for the role play?
Let's roll.
Okay.
Ring.
So you are the customer,
Customer,
and I am the bank employee. And I'm very nice because I've just come back from holidays as the bank employee, I'm really getting into my character here. And you know what? I'm feeling refreshed. I'm recharged. I'm looking forward to this conversation with my customer.
Okay. I'll be gentle.
Okay. Ring, 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 ring. And I'll pick up quite quickly. Hello. Welcome to the Home Loans Department. This is Steve.
Hi, Steve. How are you today?
Oh, I'm very well, thanks. Can I start with your name, please?
Absolutely. Canna Campbell.
Okay. Canna, just looking up. And you're having a good day, Canna?
I am. Thank you for asking.
And I've got your number here, which I won't give out on the phone for security reasons. Let's just assume that we've done all the security checks. I just realised we could have a few security breaches here. But what can I do for you today, Canna?
So I've actually been a customer of this fine institution for about 11 years now.
I can see that. You've been with us for a long time.
Yes, very loyal. And I am just doing a bit of a budget revamp. And I'm looking to save some money because, as you can tell, most of the country, things are quite tight right now. And I'm just wondering about the interest rate that I'm paying. It looks like I'm paying this. And I have been making all my repayments. I've been with you 11 years. I've made extra repayments. My home is worth, and I should have mentioned, you should get the valuation of your home as well, and obviously know how much you owe. But I've just done a quick check on thehouse.com, and my home's actually gone up in value, so I have a lot of equity. My loan has come down because I've always made sure I stuck to my repayments and made ad hoc repayments here and there. So I'm doing really well. I'm a good customer. But what's got me going, and the purpose for this call, is I think there are better interest rates out there. And I noticed on your website, you're offering new customers 50 basis points less than what I'm currently paying. So can we have a chat? And if you can't help me, would you mind popping me through to somebody that can?
Look, I'm certain I can help you. And you've clearly done your research. You must listen to podcasts.
Oh, how do they afford? That's one of my favourites, actually.
Oh, well, there you go. Look, yes, I can see here you have been with us for 11 years and you're currently paying this amount. And look, I'm just going to pop you on hold. I'll just go and see what I can do.
Well, whilst you're at it, before you go, I did also notice that Bank XYZ actually have an even better offer.
Well, then. Yes,
you're not getting out of it that quickly.
I was trying to put you on hold straight away. I just thought I'm going to go talk to my manager and see what I can do here. In that scenario, sorry, I've just stepped out of Steve's character for a moment. Is there a risk that they will say, because retaining a customer is going to be their number one priority, right?
Yes.
Okay. So they're not going to say, you can comfortably say, look, I can see like Bank XYZ is offering this. There's no risk that good old Steve over here is going to say, on your bike, head on over to XYZ then.
Well, they're not going to say on your bike, but they're just going to say, no, we can't match that rate and we can't beat that rate.
Okay.
So you've got nothing to lose from this phone call.
Okay.
And my apologies, I should have mentioned, it does help a lot if you have the valuation of your home or property with you, and you can get it for free very quickly on a website called onthehouse.com.au.
Okay. All right. Okay, I'm coming back in. Here's Steve. Zoop. Thanks for holding there, Canna.
Oh, thank you. No problem. How'd you go?
I've had a chat, and look, and yes, you've been with us for 11 years. You're paying this amount, and look, while the interest rate that you quoted is an introductory price for new customers, we will be able to, based on the amount of time that you've been with us, lower your your variable rate by 50 basis points. How does that sound?
That sounds great, and thank you so much. But I was actually looking at you hopefully being able to beat the rate. It's great to match it, but I'd like it to be beaten because, as I said, across the road they're offering a better rate than what your reduced rate is.
All right, I'm just going to pop you back on hold, Canna. I do never want to be on the other end of a call from you because I thought 50 basis points, I would have you across the line just there.
Okay, so this is my point.
Yeah.
And this is a really important one. Don't settle.
Okay.
That's marriage advice as well. Coming from someone who has a few divorces up their sleeve, never get relationship advice from me, actually. Financial, yes. Relationship, no. But don't settle. Don't go, you know what, that's good enough for me, that's fine. That's lazy. No. If you can still get a better rate somewhere else, continue on with that research and investigation. Don't just stop at that. Because there is still, as I've just demonstrated, you could potentially save, by 50 basis points over the course of a 25-year loan 5 years in, $55,000 and pay for your home loan 2.5 years earlier. So hang on, don't just stop and settle at that, the 50 basis points. If you could get it further, that discount bigger, go and apply it. But you would accept it with gracious open arms. But you go, thank you so much, that's great. And they will typically tend to apply it reasonably quickly, and there's not too much sort of paperwork involved. However, you don't necessarily stop there. You keep going, and you go, and this is where you go and speak to a mortgage broker and say, hey, they did reduce my rate. They've done a good deal for me, but I'm still a little bit irritated that they haven't matched the rate or beat the competition.
Okay. And is there room to move on other things as well? Like, you're calling up and you've just asked good old Steve just for a reduction in the rate. But say you were paying, say, a mortgage package fee or something like that. Can you kind of argue to get that down?
Absolutely, definitely. And again, this is why a mortgage broker is really good, because they know those finer details. That they'll know, okay, you're paying a $450 annual fee, or you're paying this card fee. They will go in and know those things which you may have not necessarily thought of when you're making that conversation, because you're purely focused on, the top line rate. So yes, these are things that can be definitely added in, and they're often the sort of last things that they will add in if they think they're going to lose you. Okay.
All right. So Steve's back. Canna, you still there?
Yes, I most definitely am.
Look, you really have done your research, and look, we can match the deal that you have seen elsewhere, and which will be a further 20 basis point reduction. But you will need to give me a shout out on your podcast.
Okay, Steve, no problem.
All right, there we go. I'm sure they're not going to attach conditions or something to it like that. I was just like, there's got to be a catch here. I'm like, no, I don't think there would be. It would just be, you have been a loyal customer, you have done your research, and that's the key, that you have gone in there, you've shown them what you can get elsewhere, you have established the value of your property, you've established that you have built up additional equity in your property, and that you are deserving of a reduction. Otherwise, there is a chance that they might lose you as a customer.
And even if you do hear no, if, Steve, I was to go, you know what, I'm actually going to find an even better deal. I'm going to get in touch with a mortgage broker or do my own research and find somewhere even better, even though I've accepted your rate. You can still, the answer's still not no, because when you do go to sign with another bank, your original bank will call you from the retention team, and you will have a senior manager on the phone asking you, why are you leaving us? Yeah. What can we do to keep you? I actually had this conversation with a bank about 6 weeks ago, and I spent 20 minutes on the phone. She's like, what can we do to keep your business? You've been with us a long time. We really don't want you to go. And it was fascinating hearing her talk. And she said, the moment this situation is changed, we want to get you back on board and reshift your loan back over. Like, it was really interesting. She was willing to do lots of things. Unfortunately, it was too little too late was the problem. But, you know, even if you hear, no, we're not going to do that, it's not until it comes to crunch time, you never know what rabbits can be pulled out of hats by the banking institutions.
If that conversation with good old Steve had gone in a different direction, where, okay, he's come back and offered you the 50 basis point reduction, right? And then you've said, look, that's great. Thank you very much. I accept that. But can you go further? He goes off, comes back, and all of a sudden he says, look, that is the best we're going to be able to do. That is a really competitive rate that we've offered to you in recognition of the long time that you spent with us here at the bank. And we hope that will be satisfactory to you. What do you say then?
Again, you say thank you. And I mean, that's a huge interest rate savings.
Yeah, I did right by you.
You did well, Steve. But you still, if you know that there are better deals out there, again, like, don't settle. You know, it is your money, your life, and your right to the best deal possible. So accept it. As I said, don't settle. Do research. And this is where a mortgage broker is so helpful, because they can actually do a much deeper dive, and they actually could say, look, your credit report is not as squeaky clean as you may have thought. You're actually on a really good rate. And if you were to save some money, it's actually a very, very small amount of money and not worth the hassle of moving, or they'll run the numbers for you. They will let you know. And this is the value of a really good quality mortgage broker. And, you know, you want to make sure that these savings really count. And I'm going to chime in my financial planning general advice here. When you see those mortgage repayments reduce from your new flashy lower interest rate, if you can, make those savings count. Don't let the lifestyle creep kick in or dominate and destroy those savings. Try, if you can, if your budget allows, and obviously not everyone can, and it's been very tight for all of us. Try and maintain at least some of those mortgage repayments so you can actually see that true impact of your loyalty tax slashing.
Okay. And so finishing up that phone call, you would just accept it and you don't actually need to kind of say, yeah, that's great, but I reckon I can still get a better deal. You can just accept it and hang up the phone and come back and have another crack after you've done further research, right?
Exactly. Okay. Accept that because you want to bank those savings straight away.
Yeah. So you do want to lock
you don't
that
want
in.
to cut your nose off to spite your face.
Okay.
Fine, don't bother giving me that interest rate cut.
I hate you, Steve. Something along those lines.
Worms the back of the garden.
Yeah.
No, take it, work with it, build from there. And then you've got great negotiating power to go to another institution going, hey, my bank charges me this. What can you go even further with that? Because obviously it's a tighter cut.
Do you reckon when your call comes into a call centre, everyone's like, Canna's calling. Who's got
February,
it? Who's got her this week?
Yeah. My number comes up on a big dashboard, flashing.
Yeah. One last final question, because Steve is done. You have sent him on stress leave now after your call. Are there downsides to switching providers? And you kind of flagged one of the fact that the rate might not actually be as good as it looks, that it might be an introductory one. But is there any other downsides we need to be aware of?
Yes, there are lots. So sometimes, if you do refinance to a new institution or even have to, accept a certain condition of your existing bank, sometimes they will reduce limits. If you have a large amount of money in an offset account or a regional facility as part of the terms and conditions, they might say, look, you've got all this excess funds here. Can we reduce the limit? So this is, again, why a mortgage broker is very, very helpful. Also, I had a situation where this was the refinancing call from 6 weeks ago. The new internet banking is not as intuitive.
Okay.
It's very clunky. It's very 80s. And it is a little bit frustrating, but obviously the benefits are there. So and then, of course, there are all those other conditions, all the bells and whistles that sometimes actually can end up costing you more. But some people are happy to spend more because it helps them stay focused and paying off their home loan and all those wonderful budgeting tools that often come with internet banking these days with your home loan. They can be very valuable and you can lose those insights. So there are definitely things you can potentially disadvantages in refinancing, but a mortgage broker will talk you through these things before you sign the dotted line.
Okay. Well, I think we've done a fairly comprehensive job of going through loyalty taxes, and I didn't realise, I was hoping I would get to be the customer in the
Sorry.
So I was not prepared to be Steve today. But look, you know what? I think we've delivered a valuable blueprint for those kinds of conversations. If anybody wants further information from you, where do they find you?
The best place to get in contact with me is actually at Canna Campbell Official, because unfortunately, in my Instagram account, Sugar Mama TV, has been jammed up with the erotic variety messages, so I can't actually look at my inboxes. So if you need to get a hold of me, message me through Instagram at Canna Campbell Official, not Sugar Mama TV, because I just can't bring myself to look at my inbox there.
Alrighty.
If anyone has any advice, let me know how to get rid of this problem.
Jeepers. And you can hear me every day with Sean Aylmer on Fear and Greed, daily business news for people who make their own decisions. Thank you for listening to How Do They Afford That? Remember to hit follow on the podcast, and the very best thing that you can do is tell somebody else. Send them the link to this episode and spread the word about How Do They Afford That? Thank you very much for your company. Join us again next week.